All right, let's get right into it. NVIDIA just got hit hard, one of its ugliest two-day stretches in months, dropping over 10% from its pre-earnings highs. And as if that wasn't enough to navigate, this weekend the US launched military strikes on Iran. So today we're going to walk through the entire picture, the rock-solid fundamentals, the now ugly technicals, and what this new geopolitical tension actually means for the trade.
But first, you know the drill. Here's the standard disclaimer. This whole analysis is for educational purposes only. It is not financial advice. Every investment carries risk, so please make sure you do your own homework.
For experienced investors, we've attached a possible swing trade setup for them in the analytic report in the description. But this is not financial advice. Please be cautious and do your own research.
Okay, so let's just lay it all out there. The stock is taking an absolute beating, and we have a new conflict spooking the markets. This is the big question we're going to tackle today. What is the right move right now?
To answer that, you have to start with the foundation. Let's look at the company itself. Forget about the stock price for just a minute and focus on the business. Fundamentally, is NVIDIA still a powerhouse?
Well, the numbers really don't lie. Check this out. The company is posting truly staggering year-over-year revenue growth of 73% in its latest quarter. And remember, this isn't some small startup. This is a mega-cap giant growing at a ridiculous pace. And here's something interesting. With this recent price drop, the P/E ratio has actually compressed, coming down from a lofty 43 to a much more reasonable 37.75. This is important because it shows the valuation is finally starting to look a little more sane for a company with this kind of explosive growth. Some of the froth is coming out.
And looking forward, the company guided for $78 billion in revenue for Q1. This number didn't just beat Wall Street estimates, it completely obliterated them. It's just another piece of evidence for the long-term bull case.
Now, for our investors who follow Islamic finance principles, we also ran our Halal deep dive. And as you can see, the company's core business, its debt ratio, and its interest income all pass our screening thresholds. So from this perspective, it remains a clean stock.
So here is the crucial point. When you strip away all the market noise, our fundamental score for NVIDIA is a solid 9 out of 10. This is, without a doubt, a world-class business. The problem isn't the company, it's the environment that it's in right now.
So, let's shift gears and pull up the chart. This is where things get complicated. We have these pristine fundamentals clashing head-on with some very, very ugly technical warning signs.
And this is really where it gets uncomfortable. The business is exceptional, we've established that, but the price action, what the chart is showing us, is telling a completely different and, frankly, a much more bearish story at this moment.
Okay, these are the key levels you need to have on your screen. The most critical one is the 200-day moving average. That's the long-term trend indicator, sitting at 174.69. Think of this as the last line of defense for the bulls. Meanwhile, that old support level, the 50-day average, is now looming overhead at 185.60, and it's going to act as a new price ceiling, or resistance.
And just look at the sheer selling pressure here. Friday's volume was a massive 360 million shares. That is nearly double the average. Look, this isn't just retail investors panicking. This is institutional distribution. This is capitulation-level selling. The big money is hitting the sell button hard.
Okay, now let's zoom out even further. The problem isn't just contained to NVIDIA's chart. There is a storm gathering in the macroeconomic environment, and it's threatening all high-growth tech stocks.
You can almost see the battle playing out right here. On one side, you've got these powerful short-term headwinds. Hot inflation data just killed any hope for near-term rate cuts. You have the classic sell-the-news reaction after blowout earnings, and now military strikes. But on the other side, those long-term tailwinds like the upcoming GTC conference and massive AI spending are still very, very much intact.
So that's the battlefield. And hey, if this breakdown is helping you make sense of all this chaos, do me a quick favor and take a second to hit that like button and subscribe. It really helps us continue to make these for you.
For everyone who wants to go deeper, we've put together a full written report with our execution checklist, and the link for that is down in the description.
All right, now for the part you've been waiting for, the climax of this whole explainer, the actionable game plan. Based on everything we've just covered, how should we actually approach this stock as a swing trader?
Our primary recommendation is clear, it's direct, stand aside. In this environment, with this much uncertainty, capital preservation is job number one. This is not the time to be a hero.
Now, that doesn't mean we just walk away and forget about it. It means we wait for a very specific set of conditions. We are watching for a potential entry somewhere between $168 and $172. But, and this is a big but, only if the price can hold that critical 200-day moving average for at least 2 days and we see signs of de-escalation in the Middle East. Our stop loss is firm at $164 with an initial target back up at that old support level of $185.
So let's pull all of these threads together now for the final, clear verdict. When it comes to NVIDIA, is it time to buy, sell, or wait?
This conviction score chart right here summarizes our entire analysis perfectly. Look, our conviction in the fundamental business, it's a 9 out of 10. It's a world-class company. But our conviction in the technical setup right now, that's a weak 4 out of 10. And that gives us an overall conviction for putting on a new trade of just 3 out of 10. It's just not there.
And that leads us to our final one-sentence takeaway. We are watching, not entering. NVIDIA is a great company, but it's a great company at the absolute wrong time. The macro risk is simply too high to justify jumping in right now.
Now, I really want to hear from you. What's your move? Are you already holding NVIDIA and riding this out? Are you buying this dip? Or are you on the sidelines with us waiting for a better setup? Let us know in the comments below. And while you're there, tell us what stock you want us to analyze next.
And don't forget, for a much deeper dive with our full execution checklist and scenario analysis, that download link for our written report is in the description. You can also join us on Twitter, Telegram, and Reddit for more real-time updates. And as always, remember, this is all for your educational use. Stay safe out there.